It's Brian Preston, the money guy.
Let's talk about 50 and 60-year-olds. You know, these are the people, as I told you, in your 40s, you kind of realize you're not going to be on the planet forever. But now you're trying to organize your finances. You're trying to minimize risk because you're at the point you feel like you've kind of won the game. So if I can take any type of pain point and put it over here away from me, that's better. And a lot of salespeople are going to manipulate your desire that you're avoiding uncomfortableness. And that's not necessarily a good thing for you. Also, you have adult children that are starting to come into their own, but they still are having a little trouble jumping out of the nest. So they have their hands out and they're kind of hoping you will help, Mama and Daddy Bird will help them out with the process. You have to make sure you figure out how this all works and you're not manipulated in a bad way.
Yeah, so I think when we think about kind of the first tactic, this pride and fear, I do think that this is probably the stage where fear is the most prevalent.
Yeah.
I think a lot of times it's pride. I think once we do get into the 50s and 60s, there's a psychological thing that changes when you move from being in the workforce to potentially thinking about exiting the workforce, that it just changes your psychology. And so there's a lot of fear that enters into the equation. And I think that, especially in our industry, folks recognize that and recognize they can capitalize on that.
It's a rich marketplace. You can sell with fear. It's a very easy sales tactic. Equity index annuities, they supposedly offer you, it's a ratchet thing where they say, you can't lose money. That's the ratchet where it doesn't go down, but it keeps going up with the markets. What they don't tell you is that they limit how much you can make in the good years, like last year. The S&P 500 made over 30%. Yep. If you were in an equity index annuity, depending upon your participation rate, you might have capped out at 7%, 9%. Right. Who do you think kept all that money up above those things just so that they can protect you from 2 out of 10 years? Because that's usually, historically, it's only 2 negative years out of every 10 years. So they're trying to help you avoid those pain points. That's equity index annuities. They're complicated. Long-term care insurance.
Oh, that's another big one we see that gets
long-term care insurance could be a healthy thing, but this thing is so manipulated by the insurance industry that every client that we have that has old long-term care policies, it's not uncommon now for the insurance companies to be going back to the state insurance commissioners and having huge premium increases. So they didn't keep the promises they had made to these people that when they sold these products 15, 20 years ago. Now they're getting 15, 20% premium increases, and you have to do it. I mean, it's really a scary thing. And then this is also the part where the ego plays in, vacation properties and all the things you're trying to keep up. You know, keeping up with the Joneses doesn't end when you graduate past your 30s. Nope. You experience this throughout life. You don't ever graduate high school, guys. That's the truth of the matter. You're always going to be keeping up with your peers. Just don't let it impact your finances in a negative way.
Yep, and I think that there's also, so obviously fear is a big thing, but even though you've been around for a while, you have a lot of wisdom, a lot of knowledge you've accumulated, manipulation and mistruths still exist, and they might be just as prevalent here as they were even to the 20-year-olds.
Well, I think, a lot of where I see this is for things to be good, they must be complex.
That's right.
They must be sophisticated. That's why, it's one of those things you have to be careful. If somebody is offering you, not only is it the free steak dinners at this stage, it's also the estate planners they probably offer you a steak dinner too, but they have the 3-ring binder with 26 different LLCs you need to set up to protect yourself. I see these seminars, estate planners all the time. You have to be careful because you're going to create a very complicated, I'm not saying what they're doing is wrong. It's just make sure your estate plan reflects what you need and you're not being sold something through a manipulation.
How about this one? We see this one all the time. Someone will say, I feel like I'm behind the curve, but I want to go ahead and retire. Oh, well, maybe you should consider looking at a reverse mortgage. You have all this equity tied up in your house. Why wouldn't you capitalize on that? Yeah, maybe there's some ground and potentially maybe using that as a solution for a very small segment, but that's probably not a widespread solution that most people want to undertake.
It's pretty complex. They've taken something, you have a lot of equity, and they're trying to create a very simple solution, but the truth of the matter is it's a very complex product, so you just have to know a lot what's going on. And then, Bo, we see this all the time, is that parents and grandparents will react because they get so scared, and this is not a manipulation, but it's one of those things where they're trying to get things out of their estate. They think that if I just gift it, if I get it out of here, they will usually make a bad estate planning thing. understand what's going on before you start making large decisions.
And understand who you're accepting counsel from. Just because, your second cousin twice removed who lives on the street told you how you should execute your estate plan, perhaps they might not be the best resource to figure those kinds of complicated things out.
Invisible social contracts.
Okay.
I want to kind of close out with this one is that this is, once again, how many times, and by the way, if you get on these, I don't know how we're on this mailing list because I'm only in my 40s. I'm in my late 40s, but this is already being put in our head. Maybe that's the secret. This is the invisible social contract. They start sending this out to 40-year-olds so that by the time you're in your 50s and 60s, you actually buy it.
Trigger.
But Viking River cruises. I mean, you can't watch PBS. You can't watch PBS without a Viking River cruise advertisement. And then when you get to a certain age, you start getting these in the mail. It's probably the same mailing list that gets me all these financial advisors steak dinners list. But you will see this. And so a lot of people, when you get to a level of success and a certain age, you're like, well, I guess to be the best version of myself, the invisible social contract says I'm going to go take a river cruise.
Do a river cruise.
And there's nothing wrong with a river cruise. I'm just telling you, make sure you're doing it for the right reason, not just because there's this manipulation or this invisible social contract that's pushing you. Also, think about all the charitable dinners you get invited to. You know that they're giving you these charitable dinners, these big events you're going to, because they're greasing the skids to get you to give more money. And there's
nothing wrong with that.
Very good thing, but just know what's going on.
Exactly
when you get
right.
nothing's really there's no free lunch.
Yep.
That's the thing. And then we've already mentioned this, but it's worth repeating. Weddings. We saw that the average cost of a wedding is right around $34,000 right now. That is a social manipulation. It's an invisible contract that has been put in our heads. We need to spend this. I don't know how you square that with that $34,000 average with that 60% of Americans can't come up with $1,000.
That doesn't make a whole lot of sense because they can't come up with $1,000. How are they paying for the weddings? I'm concerned that a lot of folks in that age, they're just swiping it. It's all going on credit cards and they're just figuring it out later. That's terrifying because when you get to your 50s and 60s, you ought to be moving in a very different direction than that.
All these things show me there's a lot of traps out there. Look, I always think about finances as an obstacle course. And the fact that you have all these different obstacles where somebody is trying to get you to fall into a trap. The reality is becoming wealthy is surprisingly simple.
Right.
But the part is we screw it up by just getting distracted, letting somebody pitch us on something we didn't need at the inappropriate time. And even though this inevitable wealth is so simple, somehow it never happens for the majority of people because they just never follow the easy steps. So that's what we always talk about when we do 401k presentations. But we say it's this simple. If you can just make sure you're saving 20 to 25% of your income as early as possible, and then go invest that, let your army of dollar bills actually do the work for you, and then don't get distracted. Stay, consistent whether the markets are up, whether the markets are down. Just keep barreling through it. Just keep driving through it like Days of Thunder style. You will be fine in the long term. But that is so simple, but yet so few people actually make it through the gauntlet.
And the truth is there are going to be people all on the way that are going to try to take your eyes off of the ball. All these traps, all these manipulations exist. So if you can be aware of it, it's going to just set you up to make much better decisions as you move through your financial journey.
So, but we have, if you go to moneyguy.com, tons of new resources. You guys have to go check out our resource page. We got lots of cool downloads. Give them a teaser. I think we have 8 questions to ask financial advisors.
So if you're somebody who's thinking about going to hire a financial advisor, we're actually going to equip you with 8 questions. You can print them, take them, ask them. It'll help you know how your advisor is set up, how they get paid, what they do for you, whether they're working in your best interest or not your best interest. That is for you. It's free. It's available. If you have an advisor you're already working with, maybe ask them these questions. It should hopefully start a great conversation. And then we also have our wealth multiplier that's going to be out there too. If you want to see just how powerful your dollars can be at every age, starting at 20 all the way till 65, go check out our wealth multiplier resource at moneyguy.com.
So you hear this. We got free resources on moneyguy.com. You just listen to us give a show. And by the way, this is what I would consider a more touchy-feely show. We have a lot of deep dives on the numbers as well, but you'll notice a trend. A lot of this is free information. You're going to scratch your head and go, these guys are just giving it away. What the heck is the catch? There has to be a catch. I kept waiting for an infomercial to come in at some pitch at some point. Here is the catch. We call it the abundance cycle. I want you to come here. I want you to learn, apply, grow. You're going to continue to have a level of success. And then one point, you're going to get so uncomfortable with the success that you realize that you are now the CEO of an enterprise that is so big that if you make a misstep, or you don't know what you don't know, the blind spots you might have in your financial life, you're like, I need to get somebody in here to help me. You go remember who was the person planting the seeds of that giant live oak that is now turned into your financial enterprise. And you go consider taking the relationship to the next level. We've been doing this since 2006 with the Money Guy podcast. It's now the Money Guy YouTube channel and all the other ways we're connecting. But we've actually had a wealth management business running since 2002. So we want you to take advantage of all of our opportunities, all of our advisors, all of our experience. If you think this is great, wait until you actually work with us.
I love it. If you haven't had a chance to go check out the YouTube, if you're listening on iTunes, iHeartRadio, Stitcher, go check out our YouTube channel. Make sure that you subscribe. We have a big goal for 2020, so if you haven't subscribed yet, make sure you do that so we can keep you updated when we put new information out.
No, seriously, we want 100,000 by 12/31. We're about to cross 52,000 any second now, so we need you guys to help us double by year end. So let's make it happen. Money Guy team, out.